The update that we've all been waiting for, the quarterly GDP figures are in. Q3 GDP coming in at 6.2%. And what are the key aspects to actually watch out for? My colleague Pallavi now joining us with more information. Pallavi, over to you.
Right. So, the figures for GDP for the third quarter as well as the second advance estimates for the full year have just come in. And broadly, this is in line with estimates. For the full year, we're looking at GDP growth of 6.5%. Mind you, that is the lowest in 4 years. But that was, again, something that was expected at this juncture. GVA is estimated to grow by 6.4%. For quarter 3, GDP and GVA are both expected to grow by 6.2%. So let's quickly get in our first guest, Kaushik Das, Chief Economist at Deutsche Bank, to share his first thoughts on today's figures. Kaushik, thank you so much for taking time out to speak to us. So for quarter 3, GDP and GVA are estimated to have grown by 6.2%. What are you making of that?
Yeah, hi, Pallavi. I think, we expected exactly 6.2%. So it feels nice when your forecast is correct compared to the last time when all of us got a nasty surprise with GDP coming at 5.4. It basically shows that the worst is over as far as growth is concerned. I don't know what the numbers have been revised of the previous quarter. So July, September, whether it still stays at 5.4 or not. But generally, the trend is that, after seeing a sharp dip, you're seeing a sequential improvement. October, December, if it's 6.2, you'd expect January, March to be higher, around 6.5, 6.6. So it also kind of shows that, this is not a structural problem. India is going through a cyclical downturn. And in that, we have seen the worst in July, September. Also, the fact that we had elections in April, June, government could not spend that much. And then we had heavy monsoon, which led to some activities slowing down. So all that is behind us. Government has started spending now. And going forward, you should see sequentially things improving. Although the bigger point is that growth, even at 6.2, 6.5, is below the potential growth rate of 7% plus. And therefore, you need policy support to continue to make sure that this recovery in growth is sustained.
So, Kaushik, coming to the sector-wise estimates as well. So, we're seeing agri, which is estimated to grow. The agricultural GVA is estimated to come in at 5.2%. That's again broadly, I think, in line with expectations. We did see a robust Kharif crop output. The current conditions do set us up for good Rabi crop output as well. In terms of the secondary sector, we're looking at growth of 4.8%. And in terms of the tertiary sector, we're looking at GVA growth of 7.4%. So, what are you making of these figures? So, in case of industrial, we did see some improvement in IIP, and in case of services, we did expect some lag from urban consumption to reflect in the services sector figures. What is the expectation going forward?
So the numbers that you mentioned is secondary sector, if it's 4.8, it's slightly higher than what we had thought. And it looks like manufacturing has kind of pulled up from the 2.2% that we had in July, September. We have seen corporate earnings, kind of picking up from July, September levels. That has got reflected in the manufacturing sector data as well. And that's why you're seeing industrial sector activity higher at about close to 5%. Although remember that these numbers were higher in April, June, and January, March of 2024. So we are still not at those levels where growth was at in industrial sector was growing at a faster pace. So corporate earnings still has a lot to catch up. But what it shows is that from the July, September, big down move, we have kind of incrementally improved from there. And going forward, January, March should be even better. Services also, it shows, GDP growth is holding up. The PMIs, if you've seen in the services sector, has been better than the manufacturing sector. Momentum has slowed down somewhat from, a year back, but still it's kind of okay. So to that extent, services sector is also looking good. And agriculture, as you mentioned, at 5% kind of growth is pretty good. And that's also good for the Rabi crop, which is good for inflation outlook as well for FY26. So all in all, this is a relatively better number than July, September, scare that we got. Going forward, I would assume that this, pace will pick up simply because you'd see a lot of government spending also happening, in January, March quarter. Already in December, government has started picking up their spending, and that has started getting reflected in the data. Then the government has announced tax cuts, which will also filter into the spending behavior of people going forward. RBI has started cutting rates. They're trying to manage the liquidity situation as well. Now we know that monetary transmission takes a bit of time, and it operates in the real economy with a lag. But if you build in all this, a little bit more support required from RBI, if you build in all this, the tax cuts that have been given, the expenditure that will happen from the government side, both in January, March and FY26, I think we should be okay to have 6.5% growth in FY26, despite all the negatives that are there in the global macro backdrop, the tariff wars, and all this scare that we have. We should be okay to be at around 6.5% for next year, FY26.
Coming to you, Anubhuti, she's our second guest for today, the head of India Economics Research at Standard Chartered Bank. So, to begin with, would it be fair to say, looking at today's figures, that growth has bottomed out and we are looking at some uptick in Q3? Is that momentum sort of expected to continue in the ongoing fiscal as well? And what are you making of the full year estimates? Are the risks upward or downward to today's figures?
Thanks, Pallavi. So I would say that I think, while there are significant revisions, I was pleasantly surprised by the upward revision in the fiscal year 24 GDP growth number all the way up towards 9%. We initially thought it's 8%. And on top of it, we have gotten fiscal year 25 numbers, which have also been upgraded, though not as much as fiscal year 25. Now, in terms of your question, have we really seen growth bottoming out? Yes, it pretty much looks like to be the case. That was also widely expected by the street, that from Q2 growth was probably the bottom at 5.4% number. That number has been also revised higher. So from here onwards, we should continuously see growth improving.